Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Sunday, June 4th, 2023. I titled this one, Debt Crisis Averted, Risk On in Markets. My email address is htsidoc@gmail.com. I respond to emails or remarks placed on YouTube, positive or negative. Always like to learn how to do this better. I've got nothing to sell you, so if you are new to this channel, appreciate it if you subscribe, hit the alarm so you get notified when I do these. And if you like this, hit the thumbs up. If you don't, hit the thumbs down. The more times I get thumbs up, the more likely YouTube will put this in other people's feeds so I can increase the number of people that hear my rants and raves. Disclaimer, this is for education purposes only. Anything I recommend should be considered education, not investment advice. I'm a doctor, not a broker. I am independent. I am not affiliated with any software company or trading business. I paid for the tools that I use, and trading involves risk, and you are solely responsible for any investment decisions you make. For those that don't know me, I am a doc. I'm an oncologist, which is a cancer doc. I'm doing this from my hotel room, so the audio may not be great in Chicago, where I'm at the ASCO meetings, which is the annual cancer meetings, where typically CNBC, Bloomberg, everybody's here to get the hot new news of new drug approvals or new data. So far, I'd say it's an incremental meeting. If you hear some background noise, it's because I think the Taylor Swift concert just let out because there's a lot of people on the street and I see a lot of glitter and a lot of young ladies. So they're coming from Taylor Swift, which is bizarre, the $3,000 tickets that people are buying. If you like what I do I try to post on a daily basis. Sign up for it. You'll get a note every time I post because I am so busy on the road of late. I've missed Thursday and Friday, but we'll see how we go this week. When I'm not traveling, I do it on a nightly basis. If we look at the markets, my tool looks back 5 days. So this looks at Friday a week ago through Friday this week because Monday was closed for a holiday. And the thing that really stands out, if you look at the 5-day responses, this was a super strong period. You could see the NASDAQ was up over 4% over 5 days, 4.3, 4.4 on the Qs. Spiders 3.2, the Dow 3.1, the NYSE 2.5, and the Russell 4.5. Look at the Russell on one day, 3.6 on Friday. What we saw Friday, which really pulled the week up as well, was just a massive rally and spreading out of that rally, which I think is a strong thing. Now, if you want to be bullish, look over here on the right. The 52-week lows were the 13th of October. We're now 232 days since those lows. And if you look at the markets, the NASDAQ and Qs are, the Qs are up 39.5% from those lows. The NASDAQ itself, 31.2. The Spiders almost 23. The Diamonds are just below 20 at 18%. NYSE at 15.6 and the Russell at 12. So even though there are still arguments being made whether this is a new bull or a bear market rally, does it really matter? If you've been out of the market, think of the returns that you have missed. Now, I am still not a super bull here, although it's hard not to be bullish today after the last several days. And therefore, I still have some cash on the side. But as I've been talking about on my various videos, I continue to deploy and get invested in this market with a short string attached to tight stops because I don't trust it. But, eventually, who cares if I trust it or not? You've got to be invested, or at least need to have been invested on this major move. You could see broad-based, every sector was up, and the big winner was consumer discretionary up 5.7. The Q tools just show how strong of a week. Friday, all sectors were up, 99% of industries were up, and 94% of stocks were up. You could see here the big winner in green on Friday was materials was 5.3, energies 4.7, financials 4.4. If you look at the 5 days in the market, you could see all the sectors were up, 94% of the industries, 88% of the stocks. So this is really a turnaround and a strength of the market. We'll talk about the buckets in a few minutes. Now, I think it's because of the debt deal, but in white, as risk abated in the market, you can see the 10-year and the 30-year have come down some. If we look at this question, which remains, will we see a recession? So think about this as the 10-2, this is the 10-3 yield curve. The inversions are when you go across underneath the black line. The gray bars denote a recession, and you'll notice pretty much every time you go under for any sustained period of time, you're followed by a recession. The recession occurs when you come back above the inversion line. So we're still inverted. I came off the end here. The question is, with our inversion, do we have a recession coming? Again, I came off the end here when I copied this. You'd see that the 10-3 looks like the 10-2 is really inverted. I think we have to pay attention to that, but we still have a market that's running and you want to participate. The Philadelphia diffusion index, every time it drops below -20, we see a recession. Could be during, middle, after. Now, the interesting thing is we were below -20, but we're not anymore. Does that mean we've recession abated? I don't know, something to watch. And the other thing to look for is evidence of credit tightness, and I'm not seeing it. So is there a recession in the near future? If I'm a betting person, yes. But is it imminent? No. And can we avert it? Well, we had Goldilocks on Friday with decent employment, and the Fed saying maybe they need to pause. Now, from a breadth perspective, a rising tide lifts all ships, and you can see stocks above the 200-day up, stocks above the 40 up, 12-week new high, new low up. You know, pretty clear that we're seeing a pretty broad-based breadth improvement, but breadth has still been bad for quite some time. The buckets, 72% of the stocks in the S&P 1500 are above the midline of their Bollinger Bands. That's very bullish. And notice now, 20% of the stocks are above their upper Bollinger Band. That number, if it continues to rise, will make me nervous because that's a short-term sign of some overbought. But right now, all it tells me is, boy, did we see a massive market recovery over the last few days. Good news for the bulls. Now, we wouldn't expect a Hindenburg omen, but I like to look at the new lows and notice something is new. The new lows dropped on both the NYSE and the NASDAQ. We have more new highs than new lows. You'd expect to see that continue if this market is going to rally. Now, if you look at the output from Tuesday through Friday, since this is looking at Saturday to Saturday, and what do you see here is that across the ERG, which is EPS rank plus relative strength rank plus group rank, there was strength everywhere with sort of peaks here, I think, tied to some of the earnings surprises. When you look down here, no relationship to earnings. Relative strength didn't matter. Some of the low relative strengths did well. But the key message is it's broad-based, regardless of EPS rank, regardless of relative strength, regardless of group. We saw gains. Over here are a number of lists that I build out every weekend. And what do these lists tell me? Wow, almost everything was up. Wow, that's pretty impressive. Now, led by some of the top Woodward and Brown stocks, which is a scan in HTSI, and some of the cheap stocks. Again, the Russell was up a lot, so maybe it's no surprise that some of the cheap stocks were up the most. Okay, so news and earnings, very quiet week for news. Yes, PMI orders, services are important, credit's important, jobless claims and inventories are important. So there's still a moderate amount of news. There's no Fed speakers that I could find yet. I suspect we're getting close to the next Fed meeting, and maybe we're going to get into the quiet period. That would be helpful for the bulls. Still quite a few earnings left. You know, one of the stocks that looked interesting was Ollie's, but when I see it has earnings on Wednesday before the bell, probably not something that I would open a position in. Judgment call to hold stocks over earnings dates. Bad judgment to not know when your stock's earnings date is scheduled. So my thoughts, we had a strong showing on the holiday shortened week. S&P, last week we were talking about 4,100. This week we're approaching 4,300. The easing of the uncertainty related to the debt ceiling propelled this market. We have Goldilocks, where the economy still looks strong enough that maybe we avert a recession. Yet at the same time, we had a number of Fed heads come out and say, hey, a pause or no increase at the June meeting might be the good thing to do. fact, if you look at the odds of a rate increase drop from 75% to 25%, but that thing pops around based upon what comes out of the mouth of Fed head presidents. We saw more participation with all sectors rising on the week. I still think and feel the markets want to go higher. We'll watch for follow through this week. Markets are not black and white. I've continued to have my money at work, but still have cash on the side. I think caution continues to make sense. So as the market goes higher, I have put more money to play, but I continue to have smaller than a very aggressive bull stance positions, and I've got tight stops. Let's go take a look at charts. And again, if you like my analysis, if you like the thoughts I have, come to see me at stocksanddocs.com on the Tuesday through Friday videos. Those videos are about 5 minutes long and designed to be much shorter. Okay, so now let's take a look at, we'll look at wealth charts and look at the market. So I started on Wealth Scanner with the flame. So what I'm looking here, what are the things that are hot right now? Now you'll notice that the hot one, transportation, which is interesting, but notice that it's not even close to 800. So the flame says there's strength coming into transport, strength coming into small cap growth, the IBD 50, even strength coming into value, but nothing is close to 800. If this was an 800, I'd be much more impressed. If I look at the indexes, let's just blow up the spiders and look at what happened on a short-term chart. We can see that the spiders gapped up at the open on Friday, traded higher and closed just off the high. Very, very, very bullish session. If I look at the daily charts, you could see that we broke out from this 4,200 level, which had been resistance for quite some time. I think this is meaningful. I kind of expect to see a pause here, maybe even a retest from above, but that is much more bullish than bearish. You want to see strength. Look at the Qs here, breaking out. It had been at a sort of a 10-degree angle, almost straight up over the last several weeks. Certainly the leadership in the market. Look at the diamonds here, break above their anchored VWAP, taking out the 50, closing near the high of the day on massive volume. Notice the weekly bongo has flipped back to green. If we look at the Russell, again, another bullish daily chart closing near the high, taking out the 200. Massive volume, the weekly bongo turned green. There is clear market improvement across the diamonds and the Russell. S&P looks better, and the NASDAQ continues to lead. No surprise, the VIX sold off, and if you look at the VIX on a weekly, you could see really no evidence of volatility in this market. This is a funny candle on the dollar, but we know there was whipsawing around. Is a debt ceiling, is it going to pass? Is it not going to pass this week? It got passed, if I remember correctly, on Wednesday evening. Thursday, the dollar dropped. Friday, the dollar recovered. Friday night, the Senate passed the debt ceiling, which is obviously, or actually Thursday night, which I'm sure propelled part of the market on Friday. If we look at commodities, risk off on stocks means gold and silver both eased because whatever risk premium came off. You could see, and we go back on the indices, I didn't comment enough on the dollar. So the dollar had a strong day on Friday. It's right below that 200-day. Be interesting to see what happens. Oil's bouncing around in a trading range between 65 and 60 on the USO. Natural gas continues weak. And the 10-year, which dropped on the week, actually rebounded some on Friday, closing below 3.7%. Big news, the market timing, where we look at price compared to the 30-period WMA and my weekly bongo. If you're above the weekly WMA and have a green bongo, you're a buy. If they're both below in red, it's a sell. And if it's mixed, it's a caution. We flip to a buy across the market, so we are bullish on all four of the major indices. That is a change. Again, becoming more bullish on the Russell and on the diamonds, at least for this weekend. When we look at breadth, you'll see a little pickup in the equal weighted RSP versus the cap weighted spiders, equal weighted QQQE versus the cap weighted Qs. We could see a improvement in the strength of the Russell versus the Qs. Look at the broader XSD versus SMH. So at least for this 1 or 2 days, a short-term hint that we're seeing some improvement in breadth. When we looked at my hourly sectors to see what's changed, you'll notice that the leadership in communications and technology eased a bit. But at the same time, you could see we're starting to move up on materials. We had a bump on energy. We had a bump on financials, a bump on industrials, and discretionary is still strong and biotech improved, although healthcare itself is weak. As I look at my charts this week, and I always look at over 1,000 charts between Friday night and Saturday morning, it is clear that at least for the last couple of days we've had some market rotation, and I'm seeing some things pop up like commercial trucks and the Caterpillar, Cummins. We'll look at some of the ones that we saw that looked interesting. If we go into my bullish scanner and we start by looking at a heat map, you could see that although it was a strong day on Friday, some of the recent leaders, we're talking Nvidia, Netflix, AMD, Meta, lagged. And some of the things that have been lagging, some of the regional banks, healthcare, started to do better. Steel stocks, even energy perked up this week. So it looks to me like we do have rotation. There was some interesting findings in some of the stocks that might be in construction or heavy industries. This is Terex Corp. And look at this beautiful, here's a pullback in a longer term uptrend. That's what we look for. Pulled back on the daily, broke out with a breakout and volume breakout momentum from a squeeze with relative strength and OBV, the type of setup I like to look at, and we'll look more at those as we go forward. The wealth scanner, let's look at sectors and see what the leading ones are. The prior wealth scanner, we looked at the flames. So ARKK, is small cap growth back? Well, ARKK has a lot of small cap growth. It also has Tesla, and as Tesla's improved, that has led to a rise in this. So this is one way to be playing this market rotation. IGV software, you can see how strong that is. And notice these numbers. These are maxed out at 840. Internet, cloud, fintech, next generation internet, Israel technology, genomic, FANG, Qs. So what's different here? The difference is the emergence of these smaller cap stocks, the ARKK. That is different. And Israel and others have moved back up after pulling back. But there is strength in this market. There is broadening beyond the tech. And notice how far down this 800, 790 technology, spider growth 758. Here's discretionary. Here's your IBD 50. I just get a sense that the things have changed here, and this the move has broadened, which I believe is very good. Now, if you were here last week, I talked about the what I consider almost massive improvement in my scanner, where I can have preset filters. Now, my favorite filter is pullbacks in an uptrend. Let's look at my weekend review list, which are a bunch of stocks and leading industry groups, and then a number of things that stood out in some of my various scans. And let's rank them by the dots, and let's see if there's anything that looks compelling. So, first observation, if you follow me every day, I've been calling out the sparsity, if that's even a word, the small number of stocks that were 2, 3s, and 4s. Look how many 4 dots and 3 dots I have. That shows market strength. Now, the pullback and uptrend scan, which is my favorite scan, is looking at my price and volume, which is 5 and 500. Yours is yours. It's looking at least one bullish dot, no bearish dots. And I'm looking for a reversal to the upside on the short-term BOGO, my short-term trending indicator within the last 2 weeks. And right now I have to have both the daily and the weekly bullish. So I run that against a large list of stocks. And here you go, Caterpillar. Is this a recession-proof stock? I don't think so. But there are a number of stocks that look like Caterpillar that had a good week. So Caterpillar here, big gap up, massive volume, broke out on recent resistance and has good momentum. Look at relative strength and OBV. Both daily and weekly bongos are green. Now let me just look at my buy watch list over here. I don't want to mess this up too much. And just call out some of the other stocks that look like Caterpillar to me. Now, Allison is parts, and it's used by the Detroit manufacturers in components and car building. Longer-term uptrend, recent pullback, breakout momentum, relative strength and OBV look strong. Similar industry. BWA is another auto parts, another Detroit base, or was it when I grew up? Here's your Caterpillar. Again, this is not a leading stock. This is a stock that's been punished. But you've got a recent turnaround there. Going through my list, let's see the other ones that looked interesting. P-Car, it wasn't Cummins, it was P-Car, is another one of these companies that produces commercial vehicles. So long-term uptrend, pretty significant pullback on long-term and short-term, but sort of a V reversal here off the 200, taking out the 50. This one looked interesting as well. I think Caterpillar looks better. And there's one more, if I can remember what it's called. Oh, here it is. Wabash National Corp, which sounds like it should be a bank, but it's another one of these commercial vehicle companies, also looks interesting. We call this wolf packs when we start to see a number of stocks in similar industries moving together. That's rotation. Now, I showed you Terex before. Again, beaten down stock, starting to recover, short-term pullback, big move on Friday, recent uptrend on the weekly. Well, how about Fluor, another one of these construction stocks? Maybe this is why Caterpillar's up. Are we going to start to spend now all that money that was earmarked for infrastructure? That's going to drive these stocks. So Fluor was there. I showed you Terex already. ATI is a steel manufacturer, a special alloy used in the auto industry, I believe, and in airplanes. Notice this big move here. Pullback in an uptrend. Here's your uptrend. Here's your pullback. And a big breakout here on good volume. ATI looked interesting. Let's see if there's anything else that reminded me of that group. Then I'm going to go back and look at some more of the, I think that was it. Timken Steel, all right? Another infrastructure opportunity. Is it a leader? Absolutely not. It's a stock that's been selling off. Market rotation here. Volume, breakout, momentum, relative strength, OBV. So enough of these stocks that are clearly not technology FANG stock leaders popping up starts to make me think, yes, this is rotation. Now let's go back to my scanner because that's really, to me, the key of my whole evaluation. So I've got my weekend review, pullbacks and uptrends. Let's just take a look at the top 5 or 10. So Caterpillar, I already said, it's not a leading stock, but there's some rotation occurring into this market, and this is an impressive day with massive volume. Chemours is specialty chemicals. A number of them were moving. Look at the volume. I'd have to find out the information. Did they have earnings come out? That was a dividend. Raised price to 36. I study my news, but massive up move on the weekly, on the daily, on volume, 4 dots. Look at relative strength and OBV. Another chemical stock, Eastman Chemical. I'd probably skip this right away because I see how far below that it's below the 200, which I might think is going to be resistance. 3M, again, these are turnarounds. These are stocks that have been built up. Is it a one-day reversal or it's the beginning of something new? You got to start building a list of these stocks because this might be a change in the character of this market. Look at the volume here, 4 dots, relative strength, and OBV. These are not leaders. These are not things that if you don't move on Monday, you're going to miss them. It's enough that has to tell you to open your eyes and start looking around. Stratasys is a potential takeover, so we're going to skip that. Z-Lab, a Chinese biotech. I worry about that 200. Looking down the list, Celanese is another one of these chemical stocks. Clean breakout. It's been in a short-term, an intermediate-term uptrend on the weekly. Broke out above the 200 with a gap, volume, breakout momentum. Look at the relative strength in OBV. That looks pretty darn good. Cognizant, another strong-looking stock. And then I get to, here's Caesars, but what I like better, I think, is Las Vegas Sands. I had mentioned a few weeks ago that I was in Las Vegas and how impressed I was with the amount of things in action. And I'm just thinking to myself, what's it going to be like during the F1 race? We actually sponsor Pierre Gasly. I always call him Peter, even to his face. And he's in the Alpine team. And we're excited because he's in the 4th position from the trials. But we'll probably be there watching the race. But look at Las Vegas Sands. It's a little loosey. I can tell you that town is hopping. And I think that this pullback might be an opportunity to get back into some of these casino stocks. Going down the list, FTI is an oil services company. Again, energy's been out of style. Rotation, rotation, rotation. Big move up on Friday, and you can look at others in the same space. How about Halliburton? Again, one of the big guys. Again, further down in the pattern, but a big move on Friday. A lot of volume coming in. How about Schlumberger, SLB? Again, big move on Friday. Market, these are names that we haven't talked about for months. It appears to me, when I'm sitting here seeing big vehicles like Caterpillar, specialty chemicals, casinos, oil services. Here's Flowserve. Breaking out above the moving averages, 3 dots on volume. This feels like rotation in the market. So one way I like to find stocks is looking for my favorite pullbacks and uptrends. This is a scan for it. I've also got a scan for finding stocks that are have been beaten down. So their weekly bongos, I'm not paying attention to it, but they're showing some short-term momentum after being beaten down. So copper has been lagging. It's economically important. Copper jumped, FCX, big move off the bottom. Fibrogen. So again, these are stocks in this list that are down, clearly down, 24 down to 17, that had a reversal off of the bottom. 3 dots, volume, don't like where it closed. Materials, Lululemon, look at this gap up. Is that earnings? A lot of people raised targets, 445, 355. Was it earnings? Yeah, I don't know if it was earnings or if people got really excited when a stock like Lululemon that had gapped up here on earnings had pulled all the way back to the 200. Big gap up. I'd have to do some research. We showed you ATI already. Pull back, bouncing off the bottom. See if anything here made it to my bigger list. There's Las Vegas Sand that I already showed you. Then I have stocks that I call rockets. These are stocks that are just going straight up. Sometimes it's harder to buy these stocks because they're too far gone. But look at MDB. This is a software stock. You saw that they were one of the top rated industry groups. Major 4-dot move, gap up, volume, breakout, momentum. Look at relative strength and OBV. I just have a hard time buying a stock that jumped up 28% in one day. So I don't chase. SSYS, I already mentioned, is a potential takeout play. Triple D's put in a bid. Sometimes I'll find things that make sense. There's Flowserve, which we looked at. Allison, which I mentioned in the automobile space. And these are things, this one's just going straight up. The problem with these is finding the right time to buy them. Robots, we talked about this weeks ago, broken out. So I have a series of scans. I put my watch list up, and instead of having to look every day at 1,000 charts to find the setups that I want to play, I'll run my various scans. Momo up is, I don't care about anything except for dots, and I can take my list and run it against this scan, and you could see it requires bullish dots, no bearish dots, and I don't care about anything else. So it's going to have downtrends, uptrends, but stocks that have momentum, and it's the same stocks. Here's another chemical stock, DuPont, big breakout. So I love using tools like this to help me find the leaders in the market. And during the week, my analysis is very quick. I basically go through the things I've shown you here. So let me take a breath and recant my thoughts. When I look at the indexes, it's hard for me not to be excited. I've broken above I. The markets have broken above resistance on the spider. The Q is in, feels like a climax top market melt up. The diamonds have broken above resistance, closing at the high of the day on a massive up bar on Friday, up 2%. Even the laggard Russell has taken out another line of resistance on the 200. How do you not feel bullish here? Now, when it gets too bullish, you got to worry about it. It feels like we're going higher. Other things that I think are important is my weekly timing model, where all four indices are up. I don't usually see a big sell-off when I'm getting buy signals across the four major. And lastly, it's about market rotation, and I hope that in my presentation this evening, I've shown you why I think there's market rotation, and you can even look at something bank-wise. Look at the KRE. I didn't look at the KRE. I did look at a number of individual banks, and is something happening here? Took out the 50, breakout in momentum, relative strength and OBV are turning up. Let me go back to my buy watch list and see if there's anything else here that's worth pointing out to you. Just because they're on the list doesn't mean I'm going to buy them, but what it does is it makes me watch them. Not too long ago, I pointed out AVGO over here, like last weekend. And I probably called out that it was getting expensive, but it looked interesting. I also mentioned it back here as it broke out above the 50. It went up to over 900, almost 930. It reversed. This is one, it's a flag, perhaps. And I might be looking for a break above this area and looking at AVGO to move further. Bank of America, there's that. We just looked at that. Cruise ships. I mean, people are cruising again. Look at Royal Caribbean. Look at this run it's had. So is it Royal Caribbean? Is it CCL? This is market rotation. Some of these finance technology stocks are starting to move. I don't really like this yet on Paycom, but it's something that when I wanted to watch, it looks interesting to me. So I've shown you, how about VIPS, one of the Chinese retail plays. Is it ready to run? I don't know, because it's had these little breakouts before. But the relative strength and OBV look good, 2 dots. It's worth watching, so I'll be watching VIPS. So what I do is I create a watch list, and then I monitor it on a daily basis. I will put support resistance lines, trend lines on a number of the stocks on this list. I'm going to narrow it down to, say, 3 to 5 of my favorite ones. I'll probably put in some conditional orders, but I'm going to continue to watch these as we start the week. And then I guess I'm just going to end on the ultimate, why does this look so good if we have a recession coming stock? And this is United Rentals. Fond place in my heart because this is one that I've made some money on in the past. This is getting ready to run again. The stock has come down from this most recent run from 480 down to 328. It is broken above the 50 and the 200 with volume, breakout, and momentum, relative strength, and OBV. This will be one of the ones that I'm going to look at, and it's pretty simple trade as far as I go. All right. Why is it a simple trade? Let's play with this for a second. It might be more risk than I want, so I'm going to look at that. I didn't want to hit that one, but that's fine. I want to pull up the data window. I want to put it on this right here, and I could see that the high of the day was 363.06. The close was 361. So I know the way that I like to trade, I'm going to probably look at putting, and this is education, not investment advice. I'd probably look at somewhere around the high here is somewhere around 363.30. So I'm going to bring this down here. So I'd probably put a buy stop. The way I trade, it has to move up for me to get interested. And then I'm going to look at the last 3 days, and I'm going to say I'm not going to let it get below probably the low of this candle here, which is 340. Let's see, the low here was 373. So if I was to, wait a second. The low here is 347 and 23 cents. So if I was to trade this stock and keep a stop in a decent place, I'm probably going to want to put my stop somewhere down here. So let's just say 347.52. All right. So I would look sort of at this line for me. Typically, I go the lowest of the last 4 bars. The problem is that would be too far away. The delta in this stop between 361-ish and 347 is about 14 points, which is 4 to 5%. Maybe I'll give it a little bit more room. But this is one that I find interesting. Why? Again, I've made money on it in the past, so I have a fond place in my heart. Not that that means anything to you or anybody else. But here's a stock that something's going on. I had a couple of very bullish days coming out of the squeeze, an EMS signal, relative strength and OBV. Again, the way I take these trades, this is education and not investment advice. It's so important. I have no idea what's going to happen on Monday when the market opens. Let's say some bad news comes out this weekend and the Dow opens down 200 points. Well, this is going to open up down here and maybe sell off, maybe go up. I don't really care. The key is if it opens down here, I don't get filled. That's why I like to do a conditional stop to trade into mine, because I'm not watching it that closely because, hey, I work outside for a living and I'm not at my computer all day. So let's say the market opens up higher. Well, I run the risk with a buy stop because I'll do a limit order on my buy stop. I run the risk that if the stock opens up very high, the market gaps up and the stock opens up here, I won't be filled. I'm totally fine with that. What I hope happens is the market opens up kind of sideways and then trades through my buy point and I get filled. And the minute my long fills, my short position or my stop loss to unload the position fills. And even though I'm not watching the stock during the day, I stopped into it, my buy stop is in place, and I'll use my money management rules to determine how many shares or contracts I buy. So this is one that I'm going to work up. I'm going to determine my buy price and my stop, and I'll enter it into my probably my Thinkorswim or Tasty account to make a trade. I will look through these, come up with some of my favorites. I think I know which ones they are in my mind already, and this is one that I like a lot as well, FTI. So be careful. I don't believe we're going to the moon here, but you know what? I could be wrong, and we could be going to threaten recent highs, so I think it's important to participate. But be careful, have stops, and I'll see you hopefully Tuesday in Stocks and Docs. Have a great week.